In this video, I'm going to explain what accounts receivable and trade debtors are. It's hard work for you, the business owner, running your own business without understanding accounting jargon. Follow my video and I'll explain all. If you haven't yet, click the bell and subscribe to be notified every time we produce our best pieces of content. There's loads to do for you and your business without having to understand accounting jargon. So I'm going to explain what trade debtors and accounts receivables are and how they impact you and your business. Trade debtors and accounts receivable mean the same thing. They both mean what you've invoiced for your customers and it's on credit terms. A standard credit term for most businesses is 30 days. It can change, people do 7, 14, 60 and longer, but your trade debtors and accounts receivable mean the same thing, and it's where your customers owe you money, which is your sales plus your VAT if you are VAT registered. Within your accounts, your income is recognised when you physically do the work. So when you invoice a customer, this income is going to go in your profit and loss account as income. It's not when you get paid for it. Now, this amount that you invoice, which could include VAT if you're VAT registered, sits within trade debtors or accounts receivable. Trade debtors is the more traditional name, but as we're seeing in international accounting, this is more commonly referred to as accounts receivable. This sits within your balance sheet as an asset until it is paid. So if you're owed a customer for £1,000 plus VAT, they will owe you £1,200. That will sit in your balance sheet as a trade debtor accounts receivable. When your customer actually pays you this money, this £1,200, this will be paid into your bank account and the trade debtor will go down to zero. So one thing to bear in mind when you've got credit customers is to keep an eye on making sure they're actually paying within their credit terms. It can be really common that people edge it out a bit further. And it's sometimes a well-known practice, because if people get an extra week, 2 weeks or a month or longer, they are getting you to fund their business for free. So when you're looking at your accounts receivable, make sure that you understand, yes, I know that this whole list in here is what my customers owe me at any given one time, and who is taking advantage of your credit terms. Do you have customers that are paying longer, or do you have customers that are paying shorter? The more you nail this, the more money will be sitting in your bank account, because when you've got money sitting in trade debtors, it is sitting in your customers' bank accounts. So bear in mind with this. So I would go through a policy within your business, within your accounts receivable, to make sure you are reviewing this on a regular basis. It's quite easy now with cloud accounting, because you can reconcile your bank transactions on a daily basis if you have a direct bank feed. This is quite easy. To run an age debtors report or an age receivables report is easy peasy. So are you looking at this as a regular basis? Now, when you're looking at the amount that's sitting in your accounts receivable, just bear in mind that it's not just income that your customers owe you. It could be VAT if you're VAT registered. So one thing to bear in mind as well is when that VAT is paid. If you're a certain size of business, you can opt for cash accounting. That means you pay over your VAT when you get paid, or you may be on invoice accounting. Invoice accounting is where you are paying over the VAT on invoice, and you may be paying the VAT before you've actually received the money from your customers. Please bear this in mind. So to sum up this video, your accounts receivable is going to be a total of what your customers owe you at any given one time, if you've agreed to give them your product or service on credit terms. Review this on a regular basis, because black holes in cash flow are sometimes buried within trade debtors. Because if you've gone aggressively where you're growing your business and it's going really well, you need to make sure that you're getting in the cash for this as well at the same time. Because if not, and your trade debtors are getting bigger and bigger and bigger and bigger, you're not going to be able to pay your liabilities when they fall due. Keep a handle of this is so important. And this can be where a lot of small businesses fall over, where they just fail to get in the cash for the product or services that you've worked hard to deliver. So make sure that you don't fall into that same trap yourself. Now, I hope this video has been helpful, but if there's any questions that have come up, feel free to click my Calendly link. I'll take on board any questions that you've got, get to know you a bit. I promise there'll be no pushy sales pitch.